G'day folks, welcome back to another update for Bitcoin. Now the overall trend is bearish on all time frames, so going short only. That will include some back testing. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also, don't forget we're looking at a weekly video posting where we're going to be looking at, it's called Pete's Investing Plus One, and that's where we look at very basic 101 type of analysis and chart setup, which was the last video we did, and that's in the description below. So we're looking at very basic methodology in terms of how to trade and be profitable, and so that's the weekly review. In terms of the outlook for Bitcoin as of today, April 9, Bitcoin is trading around 75,128, reflecting a 5.9% decline from the previous close. The recent price volatility is largely attributed to escalating global trade tensions following President Trump's aggressive tariff policies, which have heightened market uncertainty and impacted risk assets like Bitcoin. Despite this downturn, some analysts anticipate a potential rebound if trade disputes de-escalate, while others caution that prolonged tensions could exert further downward pressure on Bitcoin's value. So as always, look at the long-term trends. We've got the monthly, the weekly, and the daily. So on the monthly, first off, the CCI you'll notice is broken below the moving average band, giving us a bearish outlook. The price is still above the moving averages, so that's still bullish, although it's approaching that band. Now, it could actually bounce from there, possibly, in the coming weeks, like it did back here, or it could actually break through to the downside if this CCI continues further down. This is what it's happened on the weekly. It's actually broken through the CCI initially, like there, so you can see that it's broken through, and then the price eventually followed through and broke through that moving average range. So bearish momentum at the moment on the weekly. Likewise, bearish momentum as well on the daily. Now you'll notice back here we had a bearish divergence, lower highs on the CCI versus higher highs on the price. That hit this resistance at 108.263, came back a bit, hit our target area, and that target range is that 23-38% retrace level on the Fibonacci. That's a minimum retrace it will do. It hit that range, bounced out of there, hit that resistance again, double top, and then it continued on a further decline. You'll notice here as well the CCI didn't bounce as high as that previous high on the price, and that's a bearish momentum, and it's been doing that since, and now it's approaching this, what was a resistance previously, now is a support at 66,440, and that's where at the moment continuous downtrend on the daily. If we look at the hourly chart, we take only short trades in alignment with the daily trend. So on the hourly here, you can see there you would have taken only short trades where the CCI and the price broke below the respective moving averages. And at the moment, had a bit of a bounce there, but notice the CCI is still moving higher versus the price. Now if that price drops below that previous low and that CCI remains higher than that previous low, we're going to consider that a bullish divergence, but at the moment a bit early to call it yet, but it may very well likely the price still drop, and that could still be a bullish divergence, but we'll call that when it happens. Now in terms of backtesting, I've drawn here the backtest starts, which happened back here when the daily broke below the CCI moving averages, and so did the price, and that's where these two backtests are started. And I've got two here, so you can have a choose from one of these different strategies. This one's a stop loss approach, where we enter and exit with a stop loss, and this one is the average down, where we take the same trading parameters, except we average down whenever the price drops by at least 5%. Now here you can see there we would have entered that same period back there, and that closed out with the same, actually no, it averaged down there on the average down approach, but overall you'd still be in the trade how you've been trading according to the daily trend, and you close and you stop trading these approaches when the day on the hourly, when the daily breaks into that moving average range. So at the moment, as of recording, the stop loss approach has generated 10,950 odd. It's still live, and the average down approach has generated 43,500 if you're trading the $1 Bitcoin CFD. So again, just a reminder, if all that was a bit too complicated, don't forget, if you're new to trading and try to understand the charts, subscribe at least to the channel, and on look out for a weekly video, and it's called Pete's Investing Plus One. It'll be similar thumbnail to this, where we break it down into a very basic analysis for newbies on trading. The last video we did last weekend was chart setup, and that'll be in the description below for your reference. Thanks for watching, and see you in next week's update.